Hello, everyone. Welcome to this session called A Controversy, the subject matter of which is the dollar's hegemony questioned? That's a very topical subject. I don't need to give you more details. I will introduce in a few minutes our two guests. Before doing that, I would like to say a few words on the subject matter at hand without delving too much into it. Today, we are facing a lot of subjects related to dollar and the role of the US currency. The first subject that we will certainly address is the evolution of the exchange rate of dollar. Mr. Trump is playing on the price going down by 10% over the last months. In France, in Europe, we tend to talk about dollar-euro parity, but today euro is worth $1.17. A few months ago, it was worth $1.07. So, how deep can this reduction go? And then there's another debate: de-dollarization or lack thereof. What about euro? What about the booming of euro and the yuan, the Chinese currency, or other currencies? We can also say a few words, if you please, on another topic, cryptocurrency, the boom of stablecoins, something that seems to be very topical, and that seems to be the hot potato in the press. So I don't want to be comprehensive. I'm not the lecturer. I'm just kicking off the debate. We have two well-reputed speakers. We have Martin REDRADO first, on my side, who was this General Secretary of the Ministry of Foreign Affairs in Buenos Aires. And he was an economist by training, by education. Nobody's perfect, as we say, as I tend to say. Yes. And he was also the governor of the Central Bank of Argentina. So when he talks about monetary policy and exchange rate, he knows what he talks about. And he has an economic think tank right now and an investment fund. So he has an international outreach. So no need to give a further introduction. And then we'll have Pierre. Martin, we have 6-7 minutes to start. He will speak French. Congrats to you. Thank you. Thank you to all of you. It's a privilege to be among you today. The situation of the dollar is very topical because, as you said, the American dollar has devalued by 11% versus euros and most of the international currencies. So the international press wonders if it's the end of the dollar, or rather it's the emergence of other currency that can replace the dollar. That is the new subject at hand. There's an important weakness in economic policy by the current administration, and it's also a geopolitical issue with regards to competitiveness towards China. And we talk about geoeconomy right now because there's a lot of subjects relating to security and safety that is embedded with the matters of economy and monetary policy. So if we talk about dollar, we have to look at the upsides first. Well, we need to have, in terms of treasure, in terms of bonds, we have to go deeper. But there's an auction of T-bonds of the US, and the 20-year bond has changed and has made a huge leap frog by 100.7%. So it's riskier than it was before, and especially with the development of debt and the development of tax burden. And we've seen it with the approval of the law in the past, what Mr. Trump called the beautiful law, the beautiful tax law. And this is a challenge for the US from a taxation point of view. Now they have a debt of 117% of GDP, and it's rising even further. So the first challenge of the dollar is to hold its own to fund public deficit. So the first weakness is to sustain the interest rate when international market sees the dollar, or the capital market sees it, or sees the capital market as being more risky. So debt reimbursement, but also debt sustainability are important topics. But, you know, they are the deepest in the world. So when we talk about liquidity, when we talk about stability of the US market, when we talk about the American bonds, there's no comparison in the world. My colleague from Luxembourg will talk about euro. And euro had sustainability help from institutions such as the ECB, because the aim in terms of inflation, the aim was to curb inflation, but they have also helped to face crises like the Irish debt crisis, the Portuguese debt crisis, the Greek debt crisis. And I remember a conference I had with my friend Jean-Claude Trichet in 2010. We were talking about the weakness of euro. And there was no tax community, and there's no community of bankers. There's no rules as to supervision, as to taxation that would be common to Greece and Germany. And he said, Martin, you know, euro is a political project, he said. He said, however, euro has problems. We've seen it with Mr. Draghi when he said, whatever it takes. We saw the problems of euro sustainability when facing crisis. But there's also stability in terms of reserves. If we look at the world's reserves of the central banks, we can see that there's some reserves in terms of USDs in the ballpark of 70% in the years 2000, and now it's 58% of the world central banks that are in dollars. As for euros, it's nearly the same, it's 20%. So right now, there's not a real challenge for dollars. We'll see if the dollar weakness will attract towards other currencies, such as euro. But right now, we have a multipolar world of currencies. We'll see also investment funds that are investing in currencies that are close in terms of raw materials. For instance, the Estonian dollar, the Canadian dollar, the New Zealandese dollar. These are currencies which are supported by raw materials, so they are actually raw material proxies in a way. And a word on the yuan and RMB. The Popular Bank of China has a vision of bilateral internationalization with commercial relations. And I remember a small anecdote, a personal note. I remember the 50th anniversary of the Central Bank of Malaysia. I had a panel like this with the president of the Central Bank of the Popular Republic of China. It was this one. And we finished the conference, and we had an informal lunch, and it was February 2009, and the world was collapsing, and he said, your main challenge, he said, is the internationalization of yuan. And he was trying to do it in a bilateral way. There was a agreement of swaps with other countries of Asia. And he said, why shouldn't you do with the first country of the Latin America, with Argentina? And for me, it was a very important moment to showcase the strength of the assets of the central banks and the reserves of the central banks, to showcase the flows, the inflows and outflows of emerging countries. And in 2 months, we signed an agreement to have swaps with Argentina. But with this conversation, it was crystal clear for me that China would never open to other countries. They had no desire to open an account to capitals. That means that the yuan will never be convertible, because Chinese don't want the foreigners to have incoming flows of capitals that would actually increase or decrease the value of their currency. They have an exchange rate policy where there are fluctuations, but they are very narrow, they are very slim. When you have a crisis, it goes from 6.50 per dollar or 6.45. So it's not the dollar that can be sustained, but it's rather the fact that the other currencies cannot replace the dollar. Thank you. And we will definitely go back to that, because time is running on the points that you have tackled earlier. Pierre GRAMEGNA, he's a diplomat at the start of his career. I know that you hold dear to that name, which is a glorious title. You were the Ministry of Finance of Luxembourg, and you're now at the head of the European Stability Mechanism, which has played an important role in what Mr. Martin Lacrise was saying in the Greek crisis from 2010 on. It was largely saved thanks to you. But thank you for being with us. The debate is open, but we're actually waiting on you to talk about euro. Thank you, Martin. Thank you, Christian. I agree with everything that was said, so I'm not going to repeat myself. You talked about Mario Draghi, whatever it takes. We'll do whatever it takes, whatever it costs, to make sure that euro will be made more credible. And it was done, and the European mechanism of stability is the outcome of this process. So we are the last resort body that protects the Eurozone when countries encounter difficulties. This year, we have a profit of 2.8 billion, and we have a capital of 80 billion euros. We are the international body that has more caps. So when we say whatever it takes, we made sure that it would be possible. So what about US dollar? We could think that the American president believes that he can impose on the whole world whatever he wants to reduce international cooperation, to hamper rule of state, and to discontinue international conventions. But then the growth rate of the US economy is slower. It was supposed to be 2.8, it's going to be 1.7, and could actually be 1.5. So he's hampering his own economy by doing so. And the announcement of very high tariffs, what did it entail? Well, the financial markets started to doubt the dollar, to have doubts on the strength and the pivot role, the cornerstone role of the US dollar. This had never happened in the past, and this needs to be taken seriously. I'm going to give you the arguments that we should keep in mind. on that point. The stock exchange was collapsing, and also the bond market was collapsing, and the exchange rate of dollar was increasing. That's one of a kind, and it's fundamental. And Martin was right, because he was talking about the 27th of May, where the exchange rate was increasing by 1% all of a sudden. That means that the financial markets, even if they like the American policies, they are aware of this importance, and they realize that it has danger. So there's an opportunity for the euro, which is the second international currency that is the most important one. We represent 20% of the reserve when our economy has had a downturn over the last years. And so there has been a hemorrhage of non-dollar markets at the pace of $20 billion during the second quarter of this year, whilst for the 40 previous quarters, there was an increase of 20 to 40 billions per quarter. So there's a phenomenon. So does it mean that it is an opportunity for Europe and euro? Yes. Christine Lagarde said it several times over the last days. I agree with it, but we don't have the depth and the liquidity that the dollar has, point one. And secondly, we are not united enough. We have 27 financial markets that are splintered, that are fragmented, and it's not convincing enough for the outside world. We need to do our duty at home. If we get united, if we strengthen what we call our union of savings and investment in Europe, maybe we can attract more capitals, we can have a strong currency, and a strong currency may be also a short-term disadvantage, but it's also in the midterm and in the long run, it is actually an important advantage. And if we want to do our duty at home, we need to combine our budget and the military spending that we will have to do, not only for NATO, but also for the European defense in an independent way. All these projects are an opportunity today, but let's not put the cart before the wheel. We have to do military projects together. The essential part is not to have projects together, but to act together. And I will stop here. Okay, so I would like to ask a question to each of you, and I would await a brief answer before we have a Q&A session. So, first, Pierre, my first question. What we called in 2015 the Union of Market Capitals for Savings and Investments, we have the Draghi report saying, well, we have savings in Europe, but it doesn't stay in Europe long enough. And our European financial markets, are not talking about London, because there has been the Brexit, so they're out now. But I'm talking about the continental Europe. When we say that as long as there's competition between Frankfurt and Euronext, to be concrete, it's going to be hard to have the union of capital markets of savings and investments. So we are talking about a relaunching debate on securitization. But in a word, what could we do quickly enough to address this union of savings and investments that would help to bolster the European Union of the euro? That's a fundamental question. Thank you.
It's good to underscore that Europe realizes that there's an urgency to act. There's a political will. I go to the Euro meetings every month. There are national interests that are not always convergent, and I think we need to have a twofold strategy from top down. That's the Draghi report and the Enrico Linghi on the single market. The two reports aim at reducing bureaucracy, reducing all excessive regulation, from bottom up also, to be inspired by the good examples that exist at national level. I think of the pension programs that are a real success in France, these individuals saving for retirement. So if we're thinking of a different regime, we could be original. It will help a lot. But we also need to be pragmatic from the bottom to the top. The European stability mechanism tries to bring into convergence all of these economic analyses to find a solution. I have a problem when you say that the Chinese will never liberalize their capital accounts and will never play the card of the internationalization of the yuan. There were some figures that I think you said yesterday. The IMF, the exchange reserves of banks across the world, US 59%, Euro 20%, the Chinese yuan is at 4 or 5% because it's not payment convertible. The pound and the yen are in the second division, and when you're in a second division in terms of currency, you never go back up to the first division, as opposed to football. So the Japanese yen and the British pound are no longer international currencies. We're going to be using 3 currencies in the next 10 coming years: the dollar, the euro, and the yuan. Why do you think the Chinese will never liberalize their currency? I want to be provocative, but I see that the Chinese authorities really underscore their exchange rate policy. They don't want foreigners to have an influence on their exchange rate. And the exchange rates for Chinese economic policy are a fundamental element of their development policy in China. So if the Chinese politicians want to keep a fixed exchange rate without having to bring international capital in or see international capital exit, they're going to maintain this level of internationalization that is bilateral. There are controls, and the controls are on trade. We see that trade transactions from China are 55% done in yuan. So if you want to export or import from or to China, you can facilitate with yuan swaps. But in finance, if there isn't convertibility, I can't see how the yuan can play a role as an international currency. Well, we'll talk about this later. I think it's a cost-benefit analysis problem. So 2 quick questions from the room. Karim Lenaoui, who manages the Arab Policy Center think tank. You have to be brief because we only have 2 minutes left. I have a simple question. I was a central banker, so I know the spirit and mindset well. We're in a world of force, and currency is one of our weapons in this battle of strength across the world. Thinking of perfect transparency, all of those things that belong to the central bank, your partners aren't playing that game anymore. So in Europe, how are you anticipating this change in doctrine, which is a bit of an adventure, I recognize that. And that's the American game today. Very quickly, that's a good question. I think that we're living in a world that is deglobalizing, where international cooperation is reduced and transparency is thus reduced also. What the financial markets have shown us in the last few months is that this is not something that the financial markets want to see. Investors want certainty. They want the rule of law. They want transparency because they're committing their money. So I'm not certain, and I'm even convinced, that the advantage that Europe has, we're 27 countries with common rules, it would be a strong call, encouragement to invest in Europe. We have we're predictable, there's a separation in power, and we've shown a will to follow international laws, and I think that this will strengthen us, and it will limit the field of action of the United States and the rest of the world. So we're done. I would have continued this debate with you. A lot of frustration, but a lot of pleasure listening to you. Thank you.